London Mines and Money 2018. Welcome, ladies and gentlemen. Commodity TV here for you. And with me here is now Dennis Higgs. He's the director of energy fuels and he's also a consultant to Azarga Uranium. And we want to talk about uranium markets because best performing market this year, and maybe shortly also a little bit of an update on both companies. Welcome, Dennis. Great to have you here. Yeah, uranium was one of maybe the best performing metal 2018. I think we're up like 40-45% this year. Maybe you want to comment a bit on that?
Sure.
Does that go on?
Yeah, sure. Yes, I hope so. Uranium has performed well this year so far. There's several factors that are contributing to that. There's supply destruction or restriction of supply with mines being shut down and so on. And of course, the nuclear facilities that are being built in China, that's continuing. Japanese nuclear reactors that were shut down because of Fukushima, those are coming back on slowly but surely. So a lot of factors, and of course, nuclear is the safest, most reliable, lowest greenhouse gas emissions and so on. There's all those factors that make nuclear positive. So I expect uranium to continue. It's up 60% since December 2000, 2 years ago.
Yeah. Well, it's a nice move, I would say, but still not enough really to bring, let's say, new production on stream. I think the average production cost is now $42-43 per pound, and something like that in the world as an average. I mean, that's amazing. So even if you would still produce today, you lose money, right?
Yes, and I think that most producers will tell you that they need a price higher than that to get these mines back up and running, back into production and so on. So $50-60 is kind of a better number to use for expectation of the future. There are some factors that might contribute to that. We haven't talked about the Section 232 petition, which might help U.S. producers. And myself involved in a couple of U.S. producers or potential producers. So the Section 232, are you familiar with that?
Yes, absolutely.
Yeah. So that has the ability, the Department of Commerce is now reviewing that petition, and it's expected to finish its review by April of next year.
Yep.
And then the government, Trump, of course, will make a decision on whether or not to put some kind of a...
So if I get that right, that would then mean that we maybe get 2 uranium prices in the world, right?
Yes.
Because then we would have a higher US price with a premium.
Yes.
And we would have a, let's say, rest of the world uranium price, right?
Right, that's correct. If, for example, the US government decides that which has been requested, that 25% of the requirements of U.S. nuclear facilities is sourced from U.S. producers of uranium, then you could have a two-tiered price where you have, as you say, the U.S. price and the rest of the world price. And the U.S. price, of course, would be expected to be quite a bit higher than the global, the world price.
Super. So let's move to the first company, Energy Fuels. So what's up 2018? What have you guys done?
Well, Energy Fuels has had a spectacular year this year in 2018. The company's, it's the largest uranium producer in the United States. But it's also the only vanadium producer in the United States.
Oh, and vanadium is hot these days.
Yes, and I think that's part of what's driven its best performing uranium company in listed company. So probably because of the vanadium at this point. There's been some changes in the vanadium market. The U.S. rebar and so on they have to increase the amount of vanadium in the steel. So that's created this increased demand for vanadium, which has caused the price to go up. And of course, there's electric vehicles and battery storage and so on. But main driver for the vanadium price is this Chinese rebar requirement. So Energy Fuels performed very well. They've been able to finance in here through their financing ATM method. So they've got a very strong treasury, and I expect or hope they will continue to be the best performing uranium company.
Okay, fantastic. Your second take is Azarga Uranium. So what's that company about?
So Azarga Uranium is, they've got I would say the best undeveloped ISR uranium project in the United States. It's a really good grade, and it's a very large project. It's about 17 million pounds now. They're on the cusp of getting their permits.
Whereabouts?
This is in South Dakota.
South Dakota.
Yes, that's their main project. So they're expecting to get their permits from the Nuclear Regulatory Commission. Well, they've already been issued in draft. All their permits have been issued in draft. They're hoping to have that all resolved by possibly May of 2019 to get their NRC license completed. So So that will be a big event for them. The Section 232, if that's a positive ruling for U.S. producers, that'll help them. And of course, they've just increased their resource. It's now 17 million pounds of a grade of over 0.1%, which is about double the grade of many of the ISR producers in the United States. So it's a pretty significant project and a good little company.
And as far as I know, ISR has not the large capex like, let's say,
That's
projects
right.
in the Athabasca or in Namibia or whatever, meaning like the real hard rock stuff,
Yes.
I would call it. Yeah. So what would you project, just a roughly estimation, how much money you need to go in production and
Sure.
how fast you think you can move to production?
So when we built Uranerts, the Nichols Ranch project, that was $40-some-odd million capital cost total, and we started ramping up production there before we were taken over by Energy Fuels. At Dewey Burdock is the project that Azarga Uranium has. The initial preliminary economic assessment that was done a couple of years ago was estimating about $27 million in capital. They've increased the resource by a significant margin, doubled the resource. So I expect it's probably going to be $35 to $40 million capital cost, maybe a little bit less than that.
Even if it's 50, it's no problem.
Yes, it's less than $50 million I expect, and not like the Athabasca Basin projects where you're looking at hundreds of millions or $1 billion. Yes.
Yeah, exactly.
So, yeah.
How much exploration potential do you see in the property?
Oh,
for the future, because you said now you have 17 million pounds.
Yes,
but that's probably not enough, because maybe you want to produce like a
million pounds a year,
or 1.5
million.
Yeah,
yes,
exactly.
yes.
So that would be like a mine life of, let's say, 10 to 12 years so far.
Yes, yeah.
But what do you think? Blue sky potential,
Sure.
exploration potential. What do you think?
Sure. There's a lot of these ISR. Projects, the uranium occurs along these trends, and there's miles of trends and so on still on that property, and other projects that Azarga Uranium has that have not been fully explored or drilled and so on. So yes, there is exploration upside, but there's other projects either adjoining. It's funny, the project that Dewey Burdock is in South Dakota, but they've got another project right over the Wyoming line that they could have significant resources there as well. So they've got a lot of upside potential for increased resource base. But it's a very significant deposit, though. 17 million pounds is a big ISR project.
Super. So that's potential for the future.
Yes.
Fantastic, great. Thank you very much, Dennis. That was a cool insight.
Thank you.
It. Even two companies. And I would say keep it going. Merry Christmas.
Thank you. Thank you.
Yeah, ladies and gentlemen, that was Dennis Higgs, Director of Energy Fuels, and also he's a consultant to Azarga Uranium. And you heard that uranium, is still on the move. Went significantly up this year, will move next year also. Dennis sees it the same way as we see it. And of course, Energy Fuels, fantastic run, one of the best performing stocks this year, 2018 actually in the US, and Azarga, potential for future ISR production. So check it out. Thanks for watching us. Bye bye from London.